Hi, good afternoon. Welcome to the marketplace. My name is Darryl Kwao. Thanks for joining us. Coming up this afternoon, economist Dr. Priscilla Baffour warns sharp drop in Treasury bill rates could affect the economy badly.
If inflation rate does not come down, then it means that, in essence, investors are getting a negative premium on their investments.
Also coming up, Ghana poised to secure waivers from IMF to facilitate passing of fourth review in April after missing key program targets in December. Plus, prices of petroleum products set for significant reduction at the pump starting this morning or today as oil marketing companies react to favorable international market trends. My name is Darryl Kwao. Details coming up. And thanks for staying with us, everyone. First up, interest rates have dropped to 15% in the latest Treasury Bills auction. Also, demand for the short-term instruments have witnessed a decline as well. Government recorded 12% oversubscription from the last auction on Friday. Here's more in this report.
The yield on the 91-day T-bill fell by 185 basis points to 15.85%. That of the 182-day bill also nosedived to 16.92% from 18.96% the previous week. The rate on the 364-day bill also fell by 102 basis points to 18.96%. Meanwhile, the government got 9.27 billion cedis from the sale of the T-bills against a target of 8.260 billion cedis. The Treasury accepted 8.77 billion Ghana cedis of the bid tendered. The 91-day bills received the highest bid worth 6.22 billion cedis. All were accepted. For the 182-day bill, 1.833 billion cedis were tendered. About 1.803 billion cedis were accepted. The one-year bill received bids worth 1.207 billion Ghana cedis. The government only took 746 million Ghana cedis of the bids.
Well, still on this, economist Professor Dr. Priscilla Baffour is raising concerns over the significant drop in T-bills rate. She says that it could affect the economy if it is not properly managed.
At the National Economic Forum, a major issue that came up really is the fact that now the Ministry of Finance is drawing down the T-bill rates. It's more like, government has the power to take the bit, so if government is not taking, the rates would come down. But the point is that if inflation rate does not come down, then it means that, in essence, investors are getting a negative premium on their investments. And this can have it could lead to a backlash, particularly on the monetary side. And when Dr. Otu was indicating, he kept talking about the need to tighten monetary policy. Tightening monetary policy means that the prime rate would increase. When the prime rate increases, it reflects in the GRR. Lending rate is not going to go down. Yet, on the other hand, government is drawing down these interests. Investors will find alternative ways around it. And in Ghana, we know that currency substitution is a very easy way. And if care is not taken, that can create a lot of problems on the forex end.
Well, we'll have more on this subsequently in the bulletin. We'll be speaking to a finance expert. But let's turn to the stock markets, because Cowbank is expected to lead gainers on the stock market this week. With more on what we expect, here's Grace Munayin of Data Bank Research.
Last week's trading closed on a positive note, driven by growing investor interest in the stock market, which led to price gains in 12 equities. The top 5 gainers of these equities were Enterprise Group, Access Bank, Cowbank, Societe Generale and Total Energies, while MTN Ghana closed as a sole laggard for the week. This resulted in the Ghana Stock Exchange Composite Index increasing by 1.18% weekly to close at a year-to-date gain of 24.97%, whereas the Data Bank Stock Index added on 1.35% weekly to a year-to-date gain of 21.44%. Weekly turnover, however, fell by 5% to 9.1 million Ghana cedis after exchanging 3.4 million shares over 24 counters. MTN Ghana and Access Bank traded the most last week and accounted for 71% of the market turnover. Looking ahead into this week, we expect the share prices of Cowbank, Standard Chartered Bank and Total Energies to gain further, while MTN declines.
Well, turning to other news, Ghana is expected to secure certain waivers from the International Monetary Fund to help it navigate the upcoming fourth review in April. Sources close to the IMF in Washington, D.C. have confirmed this to Joy Business. Here's more from George Afe.
The extension of this waiver from the IMF is, however, conditional. This because the fund wants to see some measures being implemented now that would demonstrate the country's commitment to keeping to the key focus of the IMF program. Joy Business is learning that on the monetary side, the fund wants to see the Bank of Ghana taking some aggressive measures to contain inflation by using some of its monetary tools like the policy rate. Now, based on the current development in the economy, the Bank of Ghana is likely to hike the policy rate in the coming months as they work to achieve the end-of-year target for inflation of 11%. On the fiscal side, the executive should be seen implementing measures that would help contain the spending, whilst raising the required revenue before the end of this year. The IMF team should be in town from April this year to carry out its fourth review of how Ghana has fared under the fund program. This will be based on key fiscal development ending December last year. However, based on the 2025 budget presentation by Finance Minister Dr. Atuforson, Ghana has missed out on key targets under the fund program.
Now, prices of petroleum products are expected to witness a reduction beginning today. That's according to the pricing outlook that guides the various oil marketing firms. Here's more in this report.
Based on the report, petrol will witness the biggest reduction in recent times. This should result in petrol going down by 4.5%, resulting in a litre being sold at around 14 cedis, 90 pesos. Diesel, on the other hand, should be going for 15 cedis, 20 pesos, representing a 3.8% decline from the previous quote on March 1, 2025. LPG will go down by 3.9%, resulting in a kilogram going for 17 cedis, 35 pesos. This is the third time since February 16 that we have witnessed continuous decline in price of petroleum products at the pumps. According to the oil marketing companies, the reduction has been influenced by the consistent reduction in price of crude and finished petroleum products on the international market and the city's marginal stability against the dollar over the past week.
And you're watching the marketplace. We're taking a short break. When we come back, we get some expert analysis on our top story today on the drop in Treasury rates and its impact on the economy. Don't go anywhere. And welcome back to the marketplace. This afternoon, we have been reporting a 15% drop in Treasury rates, and we have heard from an economist warning that if this is not properly managed, it could have serious implications on the economy. Joining us to discuss on phone is Nelson Kudjo-Kwagbeji, who is Head of Finance at UMB Capital. Thank you so much for joining us on the marketplace. First, talk to our audience about why we are seeing rates drop. What is driving this change?
All right, thank you very much for having me. The rates are dropping basically because of government lack of appetite to borrow from the short-term market. You realize that as the month-on-month variation of rates stands at 45.50% for the 91-day Treasury bill, and that of the 182 days, the percentage reduction is 41.0% month-on-month. That tells you that the government, in their quest to reduce the debt, the unsustainability of our debt level, has decided to shy away from the market. Don't forget that this issue of Treasury bill is an issue of demand and supply. And so if the supply is more and the demand is low, technically the price will fall. So it's as a result of demand and supply in the market that is actually accounting for the sharp reduction in the price. Right. You will notice that the 91-day Treasury bill a month ago was at 27.98%. Currently, the 91-day Treasury bill is at 15.25%, representing 45.50%. The 182-day Treasury bill was 28.68% a month ago. Currently, it is at 16.92%, representing 41.0%. So it is technically an issue of demand and supply, and the fact that government doesn't want to borrow a lot in order to increase the debt stock.
Yeah, so Dr. Chimesi Baffour, in that clip we saw earlier in the bulletin, talked about the fact that the drop we are seeing is not in sync with other economic indicators like inflation and the monetary policy rate. Again, explain to us why this is a matter of concern. If there's a misalignment, how does it impact the economy?
Well, I think the misalignment, the picture will be clearer. Don't forget that Treasury bills are raised by the government on weekly basis. Inflation data is computed month on month. And so the expectation is that by the time we have the third quarter inflation data for 2025, the picture will be clearer as to what is exactly causing the misalignment. But let me give you a bit of a data.
Okay.
Inflation as at the end of 2024 was 23.8%. Inflation as at the end of 2024, December, was 23.8%. Inflation as it stands at February is 23.1%. So it means that there is a marginal reduction in the rate of inflation. Now, per the Ghana Statistical Service, the major driver for inflation is food. And so food inflation is what is accounting for the higher inflation that we are seeing today. The question that you ask yourself is, if food inflation is a major cost driver for our inflationary basket, what happens to planting for food and jobs 1.0 and 2.0? Is it that the implementation was not successful? Okay, and currently, this current government has also allocated 1.5 billion Ghana cedis for the agriculture for economic transformation. Now, the problem of this country is that we have beautiful and nice policies. The implementation has always been the problem. The quantum of money that was sunk into planting for food and jobs could have translated into a reduction in our food inflation. But the opposite is what we are witnessing now. So I believe that when the Ghana Statistical Service comes out with their inflation data for third quarter, the picture will be clearer for us to know what is actually accounting for the misalignment. Even though inflation is reducing at a marginal rate, the rate at which interest rates for Treasury bills are reducing is sharper than that of, inflation. So the picture will get clearer even as we head towards the medium term.
I mean, what specific risks will we be looking at if the rates continue to drop without proper management?
All right. As an investor, I will always want to have returns on my investment, most especially when it has to do with government securities. Currently, you realize that anybody at all who goes into Treasury bill investment will be having negative real rate of return. Because inflation is at 23.1%, then Treasury bill rate is at 15% and 16%. Clearly, that is a loss. And so if the reduction in the rate continues, what it technically means is that investors, both foreign and local, both individual, retail, and institutional investors, will also shy away from the market and look for other profitable alternative investment vehicles that they can put their money in. And this is a challenge. This is going to impact heavily on pension fund managers. It is also going to impact heavily on banks and insurance companies. Because after they have gotten all their money from their clients, they need to look for a place to put their money. If the rate of inflation is higher than the rate of government securities, then it means that these investors will shy away from government securities and look for other alternative investments like real estate. They can also go into the stock market. Currently, the performance of the stock market year to date is 24.97%, which is also a little higher than the inflation rate. What it also means is that governments may not be able to raise the needed, fund within the short term for the purposes of refinancing maturing obligations.
And I believe investors are watching this. What does this do to investor confidence going forward in the bond market?
Well, I think we shouldn't restrict ourselves to the bond market, but it should be the broader fixed income market. Once the rates in the fixed income market are reducing or reducing sharply, no investor will want to go into the fixed income market. They will rather shy away from the market, and as I did indicate earlier, look for other profitable alternative investment schemes. The next available investment that they can think of is the stock market. However, the stock market is also not doing too well. As I did indicate, the year-to-date performance of the Ghana Stock Exchange is 24.97%, which is slightly higher than the 23.1% inflation figure. So the stock market may also not be a suitable investment alternative. Maybe they can also look at bank FDs, but the question is, can the banks be able to absorb the excess liquidity in the system? No, they cannot. Secondly, they may also consider going into real sector investment, for instance, real estate. But the question is, real estate in Ghana, what is the status? Can you invest in a house today and sell it tomorrow? That sector is also illiquid. Can they go into commodities? So clearly, you will realize that the other investment alternatives available within the Ghanaian economy cannot also satisfy investors, both local and foreign.
So I'm just wondering, what specific actions can the government take to ensure that the Treasury bill rates at least align with inflation, the monetary policy rates?
Well, I think that government borrowing, the borrowing strategy of the government must align with monetary policy objectives so as to avoid the current distortions that we are seeing in the market. The government should come out clearly to tell us their borrowing strategy for the medium term. And once the borrowing strategy is known for the medium term, then the other economic indicators can also fit in. Don't forget, the overall objective of the government in terms of reduction in the interest rate is to reduce significantly the finance cost that they will pay. In fact, the Honorable Finance Minister indicated that within the next 4 years, Ghana will be paying over $8.1 billion in terms of debt that they have to repay. The Commissioner General for Ghana Revenue Authority says he will be mobilizing 200 billion Ghana cedis. Now, when we are mobilizing 200 billion Ghana cedis, even with an incremental jump of 20% a year, that cannot even satisfy our debt obligation within the next 4 years. And so I think that the government strategy of borrowing should align perfectly with their monetary policy so that we avoid some of these distortions within the market.
All right, great analysis. The head of finance at UAB Capital, Nelson Kujo-Kwagweji. I appreciate your time on the marketplace. Hopefully, we'll have you on another time. I appreciate it so much. You're watching the marketplace. We want to bring you one more story this afternoon. The Minister of Youth Development and Empowerment has reiterated government's resolve to support micro, small, and medium-scale businesses. According to him, government will announce the implementation of models for programs announced in the budget to facilitate the growth of youth-led businesses. He spoke to Joy Business at the maiden Agribusiness Youth and Women Dialogue organized by the Africa Skills Hub Foundation in collaboration with the National Youth Authority. Here's more in this report.
According to the Ministry of Food and Agriculture, women make up 52% of the agricultural labor force and produce 70% of food crops in Ghana. Platforms like the Agribusiness Youth and Women Dialogue, organized by the Africa Skills Hub Foundation and the National Youth Authority, aim to share experiences, tackle challenges, and explore opportunities. Addressing the media on the sidelines of the dialogue, Minister for Youth Development and Empowerment, George Opariado, re-echoed government's resolve to support the SME ecosystem.
Ejumera seeks to support entrepreneurs, so we are going to put a lot of them into hubs, but women are at the center of it, young people are at the center of it. Ejumera is supposed to train 10,000 young people every year and support about 2,000 of them with all the funding that they need to establish their business. We are committed to developing young people, and that's exactly what we are doing. President Mahama has shown commitment, and I keep saying I'm a living testimony. Even the establishment of the youth ministry alone tells the young people of this country that this is a man who makes promises and honors them and keeps to them.
By fostering meaningful discussions and knowledge sharing, the Agribusiness Youth and Women Dialogue will equip participants with the tools and network needed to thrive in the growing agribusiness landscape. Here is Executive Director of Africa Skills Hub Foundation, Daniel Entry. The theme for the event was Sustaining and Scaling Youth and Women-Led Agribusiness for Economic Growth.
We are an enterprise support organization focused on youth and women to build their capacities. In all this, we notice there is a gap in there, and that is the gap of the power of conversation, because conversations are door openers. So can we bring a lot of youth and women businesses together where we discuss and identify our issues, look at the corresponding opportunities also, and also look at how to collectively explore and collaborate together. And so the Agribusiness Youth and Women Dialogue, it's more of a conversational platform. And we'll be hoping to run this in every region to really help a lot of the young people.
The theme for the event was Sustaining and Scaling Youth and Women-Led Agribusiness for Economic Growth.
All right, and that's it for the marketplace. More news on our website, myjournline.com/business. We're leaving you with our Money Lab episode for this afternoon. Don't go anywhere.
Hello everyone, we welcome you to today's Money Lab session. My name is Dr. Skutin, an audit manager with Deloitte. On our last episode, we talked about the uses of financial statement. Today, we want to look at how to make the audit a very smooth one. So I want to start with the audit process. The audit process basically looks at the planning process, the internal control testing, substantive testing, and the reporting section. And these are the reporting section where the audit opinion is finally concluded on and issued. Now, how do you get ready for an audit? You have to get your draft financial statements ready, you have to get your trial balance ready, and all supporting schedules ready. Once you get these, the last requirement is your general ledger transactions. The general ledger transactions support all your trial balance transactions from inception of the year till the last date of the year. Once you have these key requirements, you are ready for an audit. Thank you, and talk to you on our next episode.